Hi all, let's take a look at the trading day ahead for the 7th of July. First of all, let's look at the daily chart. Now, as we all know, we've been in this medium term range for quite a while, since the middle of March. And obviously, the best trading opportunities have been when we've been coming off the range and traveling to the opposite end, coming off the range, traveling to the opposite end like that. So a great opportunity is once it reverses off a range, and speculators are basically going to play it till the other side of the range, as we can see. As we get to the extreme of a range though, it becomes a little bit trickier because first of all, there's a lot of reversal traders, a lot of breakout traders trading in those areas. And basically when we get to the end of a range, people aren't really so sure what to do. And so speculators tend to back off a little until the market's shown its hand. And then when the market's shown its hand, we can have a strong bias and we can play the market, whichever way it breaks out. Now what we can see here, this long bar here, this was the Brexit with all this volume here. And we can see that the Brexit, really all it did was probe through the top of the range and probe back down. Now the Brexit's out of the way, it's quite interesting because we've really had nothing since March that's given us any confidence that we can actually break through these highs. So every time we've hit the top of this range, we've kind of had a good expectation that we're going to go to the opposite side. Now with the Brexit out of the way, sterling is down, but the US indices seems to have kind of shrugged off the news. So really, what I'm looking for now is either we're actually going to start to push up towards 2200 or move to the downside. Now, whichever one of those happens, what I want to see first to trade with any size is for speculators to come in and to see some real volume and some real push in one direction with volume, because until we can escape the top of this range, the market's going to be a little bit wishy-washy, and that changes the techniques we use. Now in terms of the profiles, this is the weekly profile. So this is this week so far, and we can see there's not really much difference. We've got a very, very evenly distributed profile there. So that looks very typical of a range week. So what I would say is so far, as we get above 2100 or below 2070, I would certainly be looking for fade trades. The other thing about this range is as we're building more and more positions this week in this range, that does give us the scenario, or does set us up for a breakout. So I would also say, just be careful at the lows. When you talk about fading 2070 or fading 2100, again, what I would do, let the other traders do the heavy lifting. If the market probes down here and starts to move up and you see some good size coming in, look for a backstop on the order flow. And then take your long. So don't feel inclined that you have to be the first person to take the reversal trade, because we've still got a decent amount of range in it. Now what we can see yesterday, this is the split profile, and what we have here, this is yesterday, this was Wednesday's action, and this was the overnight. So we've got basically an overnight, a day session, an overnight and a day session. And although there's no real pits anymore, no action in the pits anymore, we define the day session as the time that the stock market opens. So we're looking at the eMini S&P 500, and of course when the stock market opens, that is the underlying market for the eMini S&P 500 futures. Now what we can see, we had yesterday something quite typical where we'll build an area overnight, and then what we did in the day session, we just probed down through that overnight area, and then we took a good move up. Now, it was the FOMC day yesterday, a little bit unusual for an FOMC day, in which we did see a fairly good move before the FOMC announcement. And on the FOMC announcement, we didn't see such a big move, which is quite unusual. So for the rest of the day, for the rest of the overnight session, I'm talking here, it's 1:30 a.m. Eastern time. So we're about 8 hours before the market opens. What I'm going to be doing is watching this area here. We're at the top of the range, so obviously I'm watching the top of the range here, 2096, 2100 area for a fade, but also just looking for some volume to come in either side if the range breaks one way or the other. So we've been at the top of the range for a while. We haven't broken it decisively in either direction. We're waiting for the decisive break. If we don't see the decisive break, you will know when the decisive break happens, there will be a lot of volume and a fast move. If we don't see that, wait out for the first 15 minutes. We wait for the first 15 minutes, let some volume build up, and then we can just play off what we call the local levels, so the intraday levels that develop. Now what I'd also like to show you is just exactly what happened as we reach this area here. So let's just go and look at the intraday charts. Okay, so this is where we made the low of the day yesterday, and we made the low of the day just around 10:30. And what you can see here, this blue line here signifies the overnight low. So the overnight session is obviously from 4:30 the day before right to 9:30 in the morning when the stock market opened. So basically the low at that point was here, 66.75. We just nudged through it, which is a very typical thing for the S&P 500 to do, to just nudge through a resistance level. What did we see on the order flow? Well, what we can see down here on the auction vista chart, we can see that as we moved down to that area, and then suddenly we saw a lot of trade hitting right at the bottom. So we basically ticked through the lows. We saw 1,130 contracts sold, 848 contracts bought. Effectively, what we're seeing there is the sellers getting trapped. As we moved up, we then saw another area of high volume. So we saw this area of high volume here. What we're seeing there, that was an attempt to hold the market. So we can see 945 sells, 1224 buys. Now there's more buys than sells. And what that means though, is that over time, as we traded this area, the sellers are stepping up and absorbing the buying. So you're effectively seeing the sellers attempt to hold the market. And what we can see that we bounced up over here when the sellers got trapped. We saw the sellers trying to hold the market here, nudged down a little bit, and then we can see the market actually finally took off. So what you want to do is, on these days, if it is a little bit slow at the start, or if you do just probe through an area, look for an abnormally large amount of volume on the probe through. If you do get that abnormally large amount of volume, it doesn't mean you have to take a trade there and then. What it does mean is you've potentially got sellers trapped. As you move away from that area, that's when you can start to look at engaging the market, because you know you've got sellers trapped there. You know as you move up through here, those sellers got trapped here. We've got another area of high volume here, another opportunity. As soon as it moved against these guys, boom, you can see we had a rapid move up, a rapid increase in price, just because basically you got your sellers trapped here, you got an attempt to hold the market there, it failed, and then boom, market went up and went up for the rest of the day. Now again, reading this doesn't mean you have to enter here, you have to enter here. It's giving you that confidence to know the market has now reversed and now I can stalk a long trade. And again, we can see pull back here, and the market actually came back a little bit lower here. So that's the end of the video. As I say, we're at the top of the range. We're waiting for the market to break one way or the other. There is a decent chance that this time we're going to break to the upside, because the Brexit was effectively, it's now decided and the market's pretty much shrugged it off. But if it doesn't decisively move, just be very careful and wait for an intraday area like this to play out. So thanks for listening. Bye.